Welcome back to the channel, guys. Another week, another stock review. And today I want to be talking about a company that saves me a lot of Christmas headaches every single year. And yes, you guessed it, no other than Amazon. So I hope you're ready. Got my coffee over here. Even though it's 32 degrees outside, I have actually the fan right in front of me, blowing hot air in my face because sadly I don't have AC. But I can't live without a good cup of coffee. So with this, let's get started. Now, I believe the company itself doesn't need any introduction because most of you are very well aware of it. Most likely also customers of theirs. But something you might not have known before is that actually Amazon is the 5th most valuable company in the world currently, as per the current market cap of $1.42 trillion. So quite a big number over there. And interestingly enough, you can see here really how the growth happened over the last few years only, because not so long ago, I mean, even looking at 2010, it was only shy of 60 billion. So then we went to 2015, it was 164 billion. So, these were huge numbers at the time. And who would have thought it can even continue to grow from there? But we've seen the growth really taking off 2017, 2018. And obviously we know what happened in 2020. People would sit at home and order everything through Amazon. That was obviously a huge catalyst to the growth over time. And then it cooled off a little bit. Obviously, we've seen a lot of the tech companies coming down in price recently. But now, since the beginning of the year, it really made a huge comeback. So that's really interesting to see over here. Before we head over to Lightyear, which is one of my favorite brokers in recent times, which, by the way, if you haven't tried them, you can use my link in the description below and you'll get a nice sign-up bonus. So you can really see over here the price development. When I changed the period for the last year, exactly 365 days, it's actually down by almost 5%. So it doesn't look very impressive. However, if I change it to year to date, meaning from the beginning of this year, 23, it is actually up by 60%. So quite a huge growth rally they had in the last 3 months since the beginning of the year. And that's obviously why a lot of people are excited about the stock. And begs the question, is it too late now? Is the rally over? Or will it keep on growing from here going forward? So if we look at some of the other metrics over here, you can see the PE ratio is currently at 111. I mean, that's actually the highest PE ratio that I've seen. Even higher than Palantir, which I joked about in previous videos. So that is really, really high. Now, you might see a different PE on different websites. For example, on Seeking Alpha, which I also always use to look at stocks. You can see here it's only 63. But you will see here, that's forward PE. So basically that uses forecasted earnings for the PE calculations. When I go down over here, actually you can see you have once again the 111, and that's the PE GAAP TTM. GAAP is basically the accounting standards in the US. And at the same time, it also uses the trailing 12 months. So that's realized earnings, which for me is more meaningful to look at. Now, when we look at what analysts are thinking about the stock, then obviously we see way too much green. I haven't seen that much green in terms of buy recommendations for quite a while, for any stocks actually. So very much strong buying signals over there. Again, make of it what you want, analyst ratings. I always look at them, but I don't make my decisions based on them. But obviously there is a quite strong consensus over there that obviously there is a higher upside than downside. Now, obviously analysts only giving their recommendations, that doesn't mean much, but still, it's a good indication. And something interesting to look at is the earnings performance. That's obviously where the analysts gave their expected numbers and then the actual. And in most quarters, actually, Amazon keeps on outperforming the analyst expectations. You can see here, actual was higher. There was only one quarter recently where they underperformed. All other quarters actually overperformed quite a bit. So that's nice to see, because honestly, these forecasts by analysts, for me personally, they don't really mean much. So if a company underperforms them, quite often, immediately the stock price will fall, even though the company might be doing extremely well, very healthy bottom line, just because the headlines say the company XYZ missed analyst forecast. And for me, that's just so meaningless, especially if we only look at one quarter. So yeah, that's just something to keep in mind. If you make these stock market investments, look at it, but don't really depend on it fully, because it's just one part of bigger picture. Now, other things I always like to look at is the short interest, and here at 0.78%, less than 1%. Obviously, it's a very, very small percentage, because, hardly anyone will bet against it, maybe Walmart employees, but other than that, obviously, most people are quite bullish on the long-term growth of Amazon. And once again, if we go to Seeking Alpha over here, the Wall Street analyst ratings on average, really, once again, a very strong buying signal across the board. So yeah, definitely encouraging to see that as well. And as you know, I always like to compare any stock to the S&P 500, because that's the market performance. So for me, an investment should over time outperform the market. So when we look at Amazon versus the S&P over a 10-year period, it actually really outperformed. You can see over here, the S&P returned 222%, while Amazon returned almost 4 times that at 860%. 63%. However, in more recent times, in a shorter period of time, it's actually a different picture. For a 5-year period of time, you can see the S&P delivered 71% growth, while Amazon only delivered 46% growth. And if I take the 1-year period, Amazon dropped by 3.6%, while the S&P grew by 5%. So really, with anything investing, it's so important to look at the time horizon, because a lot of investors, when they show their return, they basically cherry pick the best time period for them. As I shown you before, if I would have bought Amazon exactly a year ago from today, I would have a negative performance. If I would have bought it just a few months later, I would have a huge performance and would be here like the greatest investor. So be always very mindful when investors or people online showcase how great of an investor they are. They cherry pick often the period from when they bought it to when they sold it, because you can see how the stock over time goes up and down, up and down. So it's a matter of from where you start measuring where you bought in and where you potentially sold. Now, in terms of rating from S&P Global, which is also behind the famous S&P 500 index, that's one of the biggest rating agencies in the world. And obviously you can see here the credit rating. I mean, it's very, very high, from AAA to A1+. So definitely a very good credit rating. And I always recommend you, if you're buying a company, definitely pop over to that website and check it out. Just pop it in there and you'll see some credit rating, because some of the companies you might think are doing well actually having quite a bad negative credit rating. And for me, that's always reason to concern, because while I'll do my own due diligence, here are teams of thousands of employees globally who have much more insights and knowledge of a company, and they do their rating on that company. So it's always good to keep an eye on that as well. Now with this, let's have a look how Amazon is actually making their money. That's the income statement from the second quarter of 2023. And you can see over here, obviously the biggest part until now is still the online store from Amazon.com. That's basically the core e-commerce business that they're having through their website. They made in the quarter 53 billion. I mean, that's a huge number, obviously, and nice to see a 4% year-on-year growth over there. Then you have the physical stores, and that mostly includes Whole Foods. That's from the acquisition they've done a few years ago, and that's some of the physical retail stores. And honestly, 5 billion is quite a big number over there. Actually, I was quite surprised, and still growing at 6% year over year. So that's good to see as well. Then you have third-party seller services with a huge amount of 32 billion, and that's mostly coming from fulfillments of other vendors using Amazon. Fulfilled by Amazon, they call that service, where they take commission from that, they charge them for shipping, etc. So that's basically how they make the money offering that service. Then, of course, you have subscriptions. Most of you are probably a Prime member if you've been using Amazon in the past. I wish I could use Prime, but sadly, they're not available in Lithuania. So in the countries where they are, most people, it makes sense. It's quite affordable. That's the whole idea, to lock them into the Amazon ecosystem, so to say, and then they start monetizing you over the long term. Still makes 10 billion, and you can see a big growth over here of 14%. That also includes Audible, and obviously they have the whole suite of making movies, etc. All the benefits that come by being a Prime member. Then something interesting that had been growing more and more in recent times is Amazon advertising. Something I never thought about, how they started to become more and more advertising player. Of course, it also includes Twitch. That grew by staggering 22% year on year and still produced almost 11 billion in revenues for Amazon. And lastly, AWS, there's the Amazon cloud business, which is a huge part for the company and arguably one of the most profitable parts of the business, because they actually don't really break down profitability by each division, but people assume that AWS is actually the most profitable of all of them. Right, and then obviously you have the breakdown of the revenue to cost, etc. So in the end, the net profit actually is only 5%. It's 6.7 billion. Obviously, it's still a big number, but as a percentage, 5%, not really something to get too excited about, because those 5% can be quickly wiped out. Now, talking about AWS, when we look at the revenue growth over time, you can really see just by the last few quarters how it really ramped up. I mean, in 19, it was only 10 billion. Now, in 23, it's already more than double that at 22 billion. And profitability has also slowly been increasing. Yes, it has come down a little bit again, but still at 5.4 billion, definitely very profitable. And as they keep on ramping up, taking hopefully more market share, they also over time become more profitable. And yeah, definitely a huge part of their business. Also very interesting when we talk about cloud service providers, you can see Amazon still very much leading the charge over here with almost 35% of overall market share. And then Microsoft over recent year has really caught up to them. I mean, they're definitely getting stronger and stronger. Of course, with all the AI offerings and so on, makes it more attractive. And then Google over time is also consistently growing. And then down here, you can't see that, but it's Alibaba and IBM and other providers. They definitely have a much smaller share. Now, as I mentioned to you before, advertising also plays a big role in Amazon's overall business. So that's really good to see how they're growing over time. Obviously still way less than Google and Meta, and that's basically their core business model. For Amazon, it's just one part of their business model, right? So when you see that over here, you can definitely see how in terms of percentage, Amazon has been actually growing much faster than the other ones. Now granted, Google still remains the biggest player out there, but Amazon is definitely catching up. Next, let's look at who's actually owning Amazon. So you can see over here on Yahoo Finance that currently less than 10% of the shares are held by insiders working at Amazon, and more than 60% are actually held by institutions. The rest is held by retail investors like you and I. Now, of those top institutional holders, how else could it be? The biggest one, of course, being Vanguard with almost 7%. Then we have BlackRock with almost 6%, and then many others. But obviously, these are part of all the ETFs that they're offering. That's why they have such a high percentage, because they issue ETFs, and with the ETF, they have basically ownership in those companies, and Amazon being one of the biggest ones, part of the S&P 500 and different indexes, so that's why they are owned by those institutions. Now over here on Wallmine, also interesting to see which recent institutional transactions have happened. You can see a couple of them selling, some others like Morgan Stanley buying, Barclays buying 50%, increased their position of 50%, so that's quite big. Others selling, some more buying. So once again, across the board, different ones opening. So as I said at the beginning, even though the price looks quite expensive at the moment, still some of the big institutional buys are still keep on buying those. So that's just something to keep in mind as well. Then I always like to go on Data Roma and check what's happening with super investors and what they think about the stock, because actions speak louder than words. So if they're buying, for me, that's a good signal that the stock is obviously attractive for the long term. So you can see here, the ownership count currently is owned by 24 super investors. So that's quite high, much more than other stocks like Tesla or Palantir. And here you see all the super investors, what they've been doing in terms of recent activity. Mostly actually people selling, a couple of people buying, but overall mostly sales. Quite a lot of shares being dumped over here. So that always tells me probably right now there might be a peak that we reached. Otherwise, they wouldn't be selling or trimming their positions in a particular company. Also, when we go to insider transactions, they're actually quite recent. And you can see most of them are all sales. Obviously, some of the insiders, they might have been paid a bonus. They sell it to liquidate in order to use those funds to buy whatever they have to. So that's quite normal practice. But if everybody's selling, that's also a sign that obviously they expect the price not to go significantly up. Otherwise, you would wait 1-2 more months in order to sell at a higher price. So that's something to keep in mind. Doesn't mean it can't go higher, but if all those insiders you can see are selling quite aggressively, then maybe that's something also just to keep in mind. Now, a couple of future projects for Amazon that I'm quite excited about and might potentially further grow the share price in the future, and of course revenues. And some of those I really haven't come across before. For example, one of them is the project Kuiper. I hope I pronounced it correctly. Essentially, what it is Amazon's answer to Tesla's Starlink. So this will basically connect the world and offer people Wi-Fi in the most remote parts of the world, and basically will allow hundreds of millions people around the world who lack internet have fast and affordable broadband internet. So they're really starting to roll this out, shooting more and more satellites into space. So yeah, definitely a very exciting project with a lot of future potential. Then also something I haven't heard about before, but that's actually Amazon Pharmacy. You can order a lot of the things, obviously at a lower price. They do again all their bundles, etc. So I think once they really enter this and start linking up with different doctors, etc., I think they can be a huge player and give a big competition to a lot of the local pharmacies that you would normally frequent to, especially when we consider being a Prime member, your package can arrive in the same day when you order it. So I think that's definitely very exciting for the future of Amazon. So I haven't tried it myself. As I said, unfortunately in Lithuania, we don't have an Amazon market itself. I would have to order from the German market. So that would take too long for it to arrive in Lithuania. But this time I probably won't need the medicine anymore. So it's faster for me to go to the pharmacy over here. But definitely something very interesting with future prospects. Similar to that, they're also going into healthcare with Amazon Clinic. Again, I haven't heard about this before. Just found out when doing research. I think they're probably starting more and more in the US, all these things to trial it and then roll it out to other countries around the world. For example, if you have any of those problems over here, you can just find it. Let's say you have dandruff. Well, I hope that's not relevant for me, but nonetheless, if you have it, you can go over here, see what's included, etc., how it works. You choose a clinic, you fill out the intake. You're going to have an online consultation with the doctor. You can choose here from the clinic. Obviously, right now, they're only in the US. And then you're going to have a call with the doctor. He checks in with you and then obviously gives you a recommendation what you have to do next. So quite interesting model. Not sure if it really will take off, but something interesting for the future. Now, of course, Amazon, first and foremost, is an online e-commerce retailer. But with the acquisition of Whole Foods, they have been also going into traditional retail. And yeah, so far, the Whole Foods experience hasn't really taken off as per their liking. So they did mention that they're going to make some changes to it in the future and optimize it before rolling it out even more to other countries, etc. Another thing is Amazon Go. I don't know if you've ever been to any Amazon Go. It's actually a really cool experience. You basically scan your phone when you go in, and from there you just grab whatever you want, put in your basket, and walk out without having to see the cashier, etc. Put it on the belt, off the belt, etc. You just basically take it. You can even put it in your pocket, walk out. It knows the detail. It charges your card right away, and it has cameras everywhere. So it's really, really cool concept. Actually, I really enjoyed it. I think that's really a great model. But once again, they're not really super happy with the way it's been going so far. They are apparently closing a few of their retail stores for Amazon Go. So I do think physical retail is quite different from online retail. So they're finding their way to go about it. So I'm happy that they're scaling back for the time being to optimize it and then roll it out later. Personally, I would prefer for them to stay online purely, but I do understand that there is a big demand for people to go into physical stores. The same with big online brands, like Gymshark, etc. They started to open physical stores because people want to go in there, they want to feel and touch the products, etc. So I understand that there's a demand for it, and eventually, after they optimize it, they will go more into that niche as well. Now, sadly, Amazon is not paying any dividends. And as you know, I'm a big dividend growth investor. I love investing into companies that pay me a regular dividend income, which I really enjoy. Sadly, Amazon is not doing it. So at this stage, I'm not planning to buy any Amazon and I'm not holding any of it. But I must say, if I wasn't into dividend investing and purely look at companies to invest in, I really think that Amazon has so much growth potential. We haven't even talked about AI, which they're also starting to really go strongly after. They already have such a big advantage in the cloud game. So layering AI on top and packaging it up and selling it B2B to other businesses to really get this edge and use the data wisely, I think it's going to be a big growth catalyst for them in the future. And overall, despite it being richly valued, I do believe while there might be pullback in the short term, because I think right now it's quite expensive. We see the insider trading, a lot of super investors are selling it. So there might be a bit of a setback because the rally of over 60% this year has been quite strong. So I think there might be setback, definitely. But then long term, I really think Amazon has a long way to go, especially when I look at Apple that reached a company valuation of $3 trillion. I do believe Amazon may not get to 3 trillion anytime soon, but long term, I wouldn't be surprised if they also get there eventually. Next up, check out this video over here. I hope you enjoyed this one. If you did, please give a like, subscribe to the channel. It means the world to me. As always, guys, stay healthy, get wealthy, and I'll see you in the next one. Ciao.